Certainly, politicians have been bouncing markets around a great deal, and it's very painful to experience for everyone. But our Global Investment Committee met last week, and we decided to continue our forecast that Biden would squeak by in the election and that the Congress would be split between Democrats and Republicans, therefore providing sort of a moderate Democratic agenda in the years ahead, and that would negatively affect the U.S. market for a while, a quarter or two, and Europe would continue to struggle for Brexit reasons, but that Japan and Asia Pacific developed markets would continue to rally further. And so we're expecting, yes, Japan to outperform in the year, all of Asia Pacific to outperform in the 6 months ahead period.
Where in Asia
Sorry,
would you be looking for
where in
opportunities?
Asia? Well, certainly in Japan and Hong Kong and Australia are the developed markets that we target with rating increases and with earnings increases. We're looking for China's recovery also to help tremendously with Hong Kong and China, Hong Kong and Australia. Increased tourism, the prevalence of vaccines will all help these economies, especially the tourist economies. And as for Japan, we have certainly the tech cycle is turning up and the automobile cycle is turning up. We've got political stability with a new reformist prime minister. So it's looking quite good here, and valuations are quite attractive. So Japan's on a upward trend. It has been for quite some time. And what's interesting is that it's happening without any foreign participation in the market. That there used to be a golden rule that foreigners had to sort of lead a bull market, but that's not true anymore, and it's quite interesting change for Japan.
Right. In your notes, John, you've highlighted that a Biden victory with a split Congress would mean that more money goes into ESG funds, infrastructure-related plays. And I wonder, given the past performance of some of these funds, from a return perspective, how lucrative would these investments seem like, even if there's a policy change at the top?
Well, certainly infrastructure companies have had a very strong stock performance in the last couple of days, in particular last week or so. Some in the States have done extremely well. In Japan, we have technology infrastructure stocks with the digitalization move in Japan being a very strong theme, improving the telecommunications networks and beyond just 5G, but digitalizing all of these government services, whereby right now you need a wooden stamp to go into the office quite often to get your residency changed or something like that. And they're talking about a massive stimulus plan to change those sorts of things and make the country much more efficient.